संचार क्रांति योजना, जुड़ता छत्तीसगढ़, बढ़ता छत्तीसगढ़।
Hello and welcome. You're watching Ask PQ on Bloomberg Quint. I am Shraddha Babla.
And I'm Alex Matthew. Well, this is a show for you. If you've got questions on equity, you can send your queries in to us on Twitter, Facebook, YouTube and WhatsApp. You can also call us on 022-4540-4141. You can mail us alternatively at askpq@bloombergquint.com. Just make sure to add the AskPQ hashtag.
All right, just a quick check on where the markets are trading before we get to individual queries. The Sensex has corrected by about 200 points. The Nifty is below 10,850. Benchmark indices have now corrected in the last 9 out of 10 sessions. Heavyweights like Reliance Industries, L&T and ITC are weighing on the Nifty despite some support that is coming in from tech stocks. Infosys has hit a lifetime high, and all Nifty pharma stocks on the other hand are trading in the red. The bank Nifty has lost about 1% or so. Yes Bank has today reversed its losing trend and has gained about 3% or so post the update that was shared on unaudited Q2 FY19 numbers. Kotak Bank on the other hand is the top Nifty loser. The RBI action on Bandhan Bank said to have been a strong message for Kotak Mahindra Bank. Bandhan Bank itself has dropped the most since listing, down about 20% on account of that RBI restrictions on branch expansion. The worst performing financial stock today. Nifty Mid Cap Index has continued with its losing streak, 2% taken off for the third consecutive day today, whereas the Small Cap Index has lost another 3% after Friday's sharp 5% drop. The market breadth overall continues to remain weak with the advanced decline ratio at 1:5. Infibeam is one company that I want to point out. The shares have advanced about 13% or so after Friday's sell-off, driven by the management clarification which came in. J. Kumar Infra shares are trading at November 2016 lows after that interim order, and it's Lakshmi Vilas Bank, KNR Construction and Vaibhav Global which are among the top volume.
All right, well, that's how the markets look at the moment, and that's a fair summation of the theme so far in the recent past. Let's get our two experts in for the day. Amar Singh of Angel Broking and Parthiv Shah of TRACOM Stockbrokers are here to answer all of your questions today. Welcome to the show, gentlemen. I'm going to preempt to a certain extent some of the questions that are likely to come on Bandhan Bank. And in fact, Shraddha and I were talking about this just before we started. Parthiv, I just want to come to you on this. There is a conversation that is ongoing, and in fact the commentary coming in from the management that there's a possibility of inorganic ways in which to reduce the stake, which is over 80% down to 40%. How does one look at this from the context of the recent correction? Will there be dilution of value? And should a retail investor then be wary of entering into Bandhan Bank at this current level?
See, speaking Bandhan Bank, I think especially at upwards of 650, 700 levels, I think was prohibitively expensive. No doubt, I think the bank has fantastic credentials in terms of the return ratios, best names in the industry, everything going good for it. Even the CASA was good. And I think we saw the stock correcting, and then all of a sudden we saw the RBI circular, which talked about, I think, them not being able to expand their branches, and also, I think, freezing the promoter salary, which is still fine. I mean, that should not impact the valuation call for the minority shareholders. But yes, probably I think what reaction we have seen today, lock and lower circuit, seems to be a little sort of an overreaction. Probably the dust will settle. I think the management indicated that via inorganic or M&A activities, they can bring down the stake in the NBFC, which can kind of follow the RBI directives. There's nothing like any sort of trouble in terms of their growth trajectory going ahead. But yes, I think it's a kind of a break, and one should wait out. The existing shareholders might not have any other option but to wait out and see when the circuit opens. But let's see what the market decides in terms of what valuation it wants to re-rate Bandhan Bank to. But I think in the banking space, as I've been mentioning, that there are stocks like Kotak Bank, which again corrected today. I think we find the business model of Kotak Bank a lot more futuristic in terms of the resilience and also in terms of many of its subsidiaries valuation unlocking. So I think I prefer a switch from Bandhan Bank to Kotak Bank.
All right, guys, that's the verdict coming in. With respect to all you guys who are long-term investors, switch from Bandhan to Kotak. Bandhan, remember, is the most expensive bank, not only in India, but also in the world as far as your larger nations are concerned. Of course, the valuations would have come down a tad after today's correction. Nevertheless, at least it remains the most expensive Indian bank. Amar, the next question is for you, and this comes from Lloyd Gomes, who has 1,000 shares of Karnataka Bank, which he bought at the price of 120. They're trading at about 95 now. He wants to know if he can add at the current levels. What are the charts suggesting? Do you see further downside or an opportunity to add?
I would say that looking at Karnataka Bank, we are seeing the continuing trend, which is down, and it has been selling off. It did consolidate around 102 levels or so, but then again it has corrected. So I would say that ideally, if he wishes to add on to his positions, because if the stock trades consistently below the 100 mark, then it has a potential of trading as low as 88, 90 levels. So ideally, that could be a good level to add onto his positions, but not at these levels.
All right. Well, that's a call coming in on Karnataka Bank. Sticking with the banking space seems to be a favorite considering the kind of corrections that we've seen. Parthiv, Shivakumar is planning to buy RBL Bank for the long term. And if I remember correctly, a lot of analysts were very positive on the stock. But like a lot of other players in the space, in the BFSI space, it has seen corrections over the last month or so to the extent of about 18%. It's up just about 0.4% in trade today. Should one get into RBL Bank at the current level?
Yes, I think I find banks like RBL Bank will be at an advantage for all the stress that the NBFC might see. Stress in terms of they not being able to garnering proper amount of liability, which would impact probably the growth in their assets. So in such a case, a franchisee like RBL Bank, which can attract depositors, certainly is at an advantage. And yes, I think all these banks after the correction look very, very attractive. There was a point in time at 600 levels where the valuations were really stretched. Now all these are available at around 3.5, 3.6 times price to book, which I think for a growth bank like RBL Bank makes very good sense. So if one has a 3 to 5 year horizon, I think there shouldn't be any hesitation to start buying RBL Bank now. But the way the market setup is and the way continuously we are seeing lower levels and further derating possibility of the market, I think the best strategy in this market is identify your quality shares, identify your good quality stocks that you want to buy, and buy them in a staggering manner, maybe 2 or 3 tranches. I think that would help you to get the best price discount.
Okay.
I just want to point out, there's somebody on Facebook who perhaps dislikes something that is being said. If you don't like something, do let us know what you're saying or what you're thinking. But let's take another query at this point.
All right, I'm going to continue with the queries on financials. Ravi Shankar wants a view on IIFL holdings at the current level. He has a short-term view, 6 months or so. So, Amar, what's your call on IIFL holdings? I know most of these quasi-NBFC broking stocks have corrected sharply, but what are the charts suggesting?
I would say that the trend, if you look at the trend still remains extremely bearish for the stock. But if you look at 28th September, that is Friday's move, so somewhere or the other on the downside, it has got strong support around 440 levels or so, because that was the low that was made. So I would say that, but I wouldn't recommend anyone going and buying at these levels, because the trend still remains bearish, and what is likely to happen is that the stock could go in for some consolidation. There could be some short covering, but again, I would say higher levels would witness selling pressure, and the levels to watch out on the upside is 520 to 540. That's a crucial zone of resistance for this particular stock.
That you have to watch out for. We've got a question on Asian Granito. Let's pull up the stock. It's in fact, from what I can see, hit a 52-week low today. Of 170.8. It's just about higher than that, but it's down about 6.4% in trade at the moment. We've got an investor, Harsh Darak, who's holding Asian Granito at a very high level. In fact, let's pull up the long-term charts if we can, because seemingly Harsh is bottom at, well, he says levels of 600. Yes, so there has been a correction from around 611 or thereabouts, down about 70% in the year. Parthiv, for somebody who's held on through this kind of a correction, what kind of advice would you give them?
See, again, I think many of these tile makers, I think they were envisaging the huge unorganized to organized market share, as a result of which we would have seen a continuous trend of a long-term volume growth story along with very healthy margins. But unfortunately, what we have seen is many of the unorganized players became organized and that competitive intensity has remained. And probably that's the reason where all the built-up in many of these tile stocks where the valuations had also become stretched now are getting massively derated. I think again in the tile sector, one will have to stick to very good quality names. In terms of the names, I find a lot more comfort in terms of recommending a Kajaria or Somani Ceramics. These are, I think, the market leaders in terms of the brand equity that they have and also the presence that they have, all the capex that they have done. So I think, again, the same strategy, which is the staggering manner approach for a stock like Kajaria or Somani, would make better sense to play out the tile sector as compared to sticking with a stock like Asian Grand.
All right, guys, shift to Kajaria and Somani as compared to your current or existing holdings in Asian Granito. That's the advice coming in. We're very sorry. We are going to have to cut this session short. We're going to come back quickly with Yes Bank's CFO, Rajat Monga, who's going to be talking to us. So stay tuned.